we are welcoming all the guys to this lesson. In this lesson, I am going to discuss about the sales tax, right? Sales tax. Sales sales tax, right? Sales tax. Okay. Here sales tax. We are making the tax. Okay. We are making the tax on the sales. We are making on the sales. We are making the tax on the sales, right? How do we make the tax? Why we make the tax? Tax is sales tax are made to the state government, right? Because it is the requirement of the statutory. It is a statutory requirement. So we have to anyhow pay the what you call tax, sales tax, right? And as per the statutory, the people who are registered for the sales tax only have to pay the sales tax, right? The people who have registered with the government for the sales tax only have to pay the tax and impose the tax. You know why? Because there are sales tax can be called in any other ways. The category of sales tax may be differ, the names may be differ. In some countries they used to say VAT, value added tax. Some other countries they used to say goods received tax, right? So value added tax and good received tax. And in the value added tax we don't give specific name for this sales tax, right? We say commonly sales tax, and the percentage of sales tax also vary from one country to another, right? There's no common tax. Some countries used to charge 5%, some countries used to charge 15%, some are used to charge 2%, like that, sales tax. So the person who is registered with the tax only can pay the tax and can collect the tax also. He cannot collect the tax. He is the now tax collector on behalf of the state. He is the tax collector of on behalf of the state, right? He is the tax collector on behalf of the state. So in such a case, once he collected the tax, he had to remit it, that payable, right? When he is collecting the tax, that means output tax, right? Later on we will come to the tax, that aspect, right? So once he collect the tax, he has to remit the tax to the state government, because he is acting as a tax collector for the state government, right? That tax pay collected is payable to the state government, right? Understood that? So anybody who are not registered with the government for the collecting tax, sales tax, not allowed to impose or calculate tax on their supplies. Understood? Now we see how the sales tax works, how the sales taxes works, right? So we'll say company A, right? Company A, right? He imports tax. Company A imports material, materials, right? For materials for cloth materials, right? Cloth, right? Okay. Then company B imports and supplies, manufactures. Otherwise, you say manufactures, manufactures, manufacture, manufacture cloth materials and sells to B, sells to B, right? B, right? Stitching the clothes. The garments, and supplying to the wholesaler C, to C. C, B. C supplies this to end user, end user, end users, end users. He purchase the garments. He purchased the garments from B, and he is selling the garments to the end users. End users means customers. We are the customers, ordinary people. Garments in the sense shirts, or we will say, rather than saying the garments specifically, we will say the shirt, right? One cloth. Rather than saying garments, we'll say shirts. Then you can understand quickly. Shirts, right? Shirts, 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 right? So the manufacturer also register. All three are registered with the government, state, right? Registered with state, state. Okay, registered with the state, right? All these people registered with the states for tax, right? For sales tax. They have registered. Then these all three people have to pay the sales tax. Understand? So we will say he he supplies material, shirt material, manufacture shirt material for 100 rupees, right? The government tax rate is 20% or 10%, we say 10%, right? 10% sales tax, imposes 10% tax. So what he does is he sells for 100 rupees. Normally normal selling price is net net we say net selling price is 100, right? He is making some conversion, he is stitching it, and he is selling it for 200 bucks. 200 shirts. He is converting this, he is purchasing it unit material 100, and he is making the stitching the shirts and selling to the retailer for 300. He is selling at the end user for 100 shirts. Material cost 100, stitching, after stitching he is selling to the retailer for 300, and retailer without making any additions he is selling to the end user 400, right? This is the net selling price net. Now then these people's profit you see, we'll say he may incur say profit of, we will say this is assume that there is no any further cost that cannot be say, no, right? This is his selling price, right? This is his selling price. We cannot ascertain the profit here, right? Selling price. So if the selling price is same, there is no change in the margin. They may have a 20% margin on this, right? 20% margin on this, right? They may have, right? So next is the government imposes 10% sales tax. Sales tax 10%. How much? 10 rupees. Here come how much? 20 rupees. Here how much? 30 rupees. Right? Right? They have to pay taxes. Then add the tax. They are adding the tax to the selling price. Right? They used to add the tax on selling price. Understand? They add the selling price, they add the tax on the selling price. So the traders, manufacturers are not affected by the selling and the sales tax. by imposing by the complete sales tax is borne by the customer end user only bearing the whole sales tax, right? There is no effect, negative effect on manufacturers or stitching shirts B or C. So he increases his selling price, new selling price with tax, his new selling price with tax, his new selling price with tax. Understand? Okay. This is the sales tax, computation of sales tax, right? Right? Understand? This is the way of computation of sales tax. When this person increases the tax, when the increase takes place, right? This is the very first purchases. Okay, very first purchase before imposing the tax. Before imposing the tax, this is the selling price for them. Purchase price for them. This selling price for him, purchase price. His purchase price may be for the selling price. Right? Now, new selling price is, this is the new gross selling price. This is the gross. This is the new selling price. New selling price. New gross selling price. Right? So now this is the new selling price. Right? Or gross selling price. Gross selling price. This net selling price net. This is the gross selling price. Gross selling price. It's the gross selling price. Right? Actually, this selling price, the tax is not going to affect him. Right? This is not going to affect him. This person, in his say, he used to say sales and tax, sales tax, tax, sales and sales tax. His sales is 100, always 100. His sales is always 100. Right? Tax 10%, that is payable. Payable to government. Tax, sale tax always payable to government. There is no change. Right? Understand? This is the tax works. This is the way the tax works. Here for B, his sales now increased, and sales tax tax. Here you will say purchases. Purchase. Right? Understand? In the sales, here he used to make the sales of 220. Right? 220. But he will make the net sales 200. 200 only. Let's say 200 only. He will. And 10 here, 20 he has to pay for the sales tax. That is credited. 200 sales credited, tax credited. But he had purchased this from him. Purchase 100 and sales tax 10. Right? Then his payable tax is 20. Now, before this one, I will show you in some other way. Okay. Here, tax paid by A is tax sales tax. Tax paid by him is 10. A pays 10. Whereas B pays 20 minus this 10. Right? He also paying the 10. Right? Because his incremental value is 100. Incremental value. Incremental value is 100. Incremental value. Right? This is his incremental value. For his incremental value, only he is paying the tax, that is 20. Right? This tax he can claim it as input tax. Input tax. He can claim this tax as input tax. Right? C can claim this tax as input tax. This is called output tax. This is input tax for him. This is output tax for him. This is for input tax for him. So if you say increment value is 100, for 100 only he is paying the value added tax. Value added. How much the value is added? 100. From 100 to 200 he is making. So value is to increase by 200. Then the value added tax charged 100 into 1 and 20 is total, 100 is 10 is derived. That is the way. Here see his incremental value also 100. Right? Incremental value also 100. 100. Right? Incremental value. 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 Right? 100. This is the, on this he has the, here 30 minus 20, that is equal to 10. For the 10 only he is remitting 10 only, not 30. He is incurring a 30. He pays 30 but he incurs 10. He is charging 30 but out of 30 he had paid 20 to him earlier seller, then he has to pay only the 10. He has to pay on this. This is the liability. This is the liability for. This is the liability. Tax payable is 10. Each stages, manufacturing stages, they get. He said shirts. He selling the shirts with some packing. Right, packing. Right. So this is the sales tax works. This is how the sales tax works. Okay. So here he is going to pay only the incremental value only, not the whole. This 10 tax he's deducting. This is his liability, right? This one is liability. Tax liability. Tax liability. Tax tax is tax liability. This is the tax liability. End users only, you and I. End users mean you and I. Right? End users in the sense you and I only going to pay this 300. This incremental value is going to end users will be paid with the 330. 330. All these 10, 20, 30. He is charging 10. This person also charging 10. He is charging his 10 with this person's 10. That's what he is charging 20. This person charging 10 along with this 20. That's what this person is charging 30. Because this person had been charged with 20 sales tax. That's what he is adding this, his cost. This person charged 10 with his 10, 20. That's what he charged 20 with this one, right? So ultimately who is going to bear the taxes? Consumers. End users or consumers? Consumers. This 30 beared by consumers, beared by final consumer. Final consumer. Sales people are not going to affected by this sales tax, right? Sales people are not affected by this matter. For an example, I will say, right? This is net net right? Cost, we will say this person cost is, right, cost, cost, cost is, right, 100. 100 means he is incurring a 50 rupees cost, right? 50 rupees cost. This person involved, this is not cost for him. 10 rupees is, 10 is not a cost for him. He is incurring 150, 100 plus 50, 150, because his 100 is the cost, 50 is cost, right? This person cost is 220, 220, or we can say 50, right? 200, 200 is his cost. Then what, I understand what is the his, if you deduct this from their selling price, what is the effect? His profit, profit is 100 minus 50, 50. His profit is 200 minus 150, 50, right? His profit is 200 minus 300 is 100. Your profit is 100, right? When the selling price is net selling price, net selling price. This is 100, this is 200, this is 300, right? Okay, right? Yeah. Then the profit is, this is their profit, this is their profit, this is their profit. Okay, this is the, before charging the, this happens before charging the tax, sales tax. After charging the sales tax, what is their selling price? Selling price, gross selling price is 110. This one is 220. This one is 300. 330. Right? This one is gross profit 110. Gross selling price, right? Gross selling price 110. This one is 220. This one is 330. From that, whatever the sales incurred, cost is here, cost incurred, cost incurred is here 50, and here 150, right? Here 200. And next one is sales tax paid. It's sales tax paid, here is 10, there is 20, here is 30. 10, 20, 30. So this one you have to deduct it. this one you have to deduct it, then you will arrive at 50. This is their profit, right? This is their, this from 200 and from 220 you have to deduct cost of 150, then sales tax 20, then you will arrive at 50. This person also will have a profit of 50. In C, the person C has a selling price, gross selling price of 330. From that you have to deduct the his cost, purchase cost, and his purchase cost is how much? 200, no? Purchase cost is 200, then we will say 220, right? 220. 220. We will say purchase cost is 220. Then this one is 8. 8, right? This is 8. This one 220 in the sense here you are making 220. Here also you are making 220. Then if you deduct 220 plus 30 and 250, it is the 80. 80 is the profit you are making. Here also you are making the 80 is the profit. 80 is the profit. So here also he is making the same profit. Here also making the same profit. This is before sales tax. This is after sales tax. This imposing of sales tax not going to affect the manufacturers or the people who are involved in the conversion, these factors, and the person is selling at to the final consumers. It is not going to affect. This is going to affect the person, consumers, end users or end consumers are going to bear this whole tax amount, right? Understood? Right. Okay. This is the sales tax computation method, right? This is the sales tax computation method. Okay. So I hope you would understand, right? Again, we will go through, right? A manufactures cloth materials, right? A manufacture cloth materials. He sells the cloth materials to B for stitching the shirts. B stitch the shirts and supply to the C. He doing the packing part of the shirts and selling to the end users, right? So the government is charging the 10% sales tax. 10% sales tax, right? Sales tax is net, the selling price, selling SP mentioned by me is net selling price, selling price net 100, selling price is selling price 100 before imposing the tax, right? Before applying the tax, the selling price is 100, this one is 200, and this one is 300. A 100, B 200, C 300. Then government imposes a sales tax of 10%. He is applying the same 10% on these selling prices, right? So he is arriving 10 for 100, 10% is 110. For 200 and 200, 10% is 20. For 300, 10% is 30. So these people are arriving at a gross selling price. They used to say this one amount is gross selling price, and this price they used to say net selling price. Okay, so 100 plus 10, right? 100 plus 10, 100 plus 10, 200 plus 20, 300 plus 30. Then they are arriving at 110, 220, and 330. The selling amount with tax. Selling amount with tax is this, right? Selling amount without tax is this, right? Okay. And sales tax. What is the sales tax they are going to incur, right? What is the actually what is the sales tax collected by them? This 10 amount is collected by the tax liability. This 10 amount collected by the A, and he has the liability to uh, liability to submit so remit it to state government 10, right? This person apply the 20. He's collecting 20 tax, 20, and he had paid 10 to A. Out of 20 he had paid 10 to A, right, with purchase price 110, right? Then he has to pay balance 10 only. So he has the tax liability of 100 to the state government, right? Like that, C also like that. He purchases the material at 220, right, which has the cost 200 for him, 20 is tax he is paid. His tax, he calculated his tax payable as 30. The difference between the 20 and 30 is 10. 10 is payable by him, right? His tax liability is 10. This liability he is collecting from the end consumers, right? This person collecting this from the B, this 10 rupees collected by the A from B tax liability. B what is doing is he is collecting this 20 from C, right? What C does is he is collecting this 30 from end consumers, right? End consumers. Understood this? Have you understood this mechanism? Have you understood? I think you would have understood this mechanism, right? This is the maximum way of explaining, good explanation for you, right? Right? This is this, and we have identified who is the liable. And here we can see, even to prove this, I have made this calculation. To prove this, that this the tax, sales tax is not going to affect the this A, B, C, because I am proving here. Selling price net in the sense, net selling price is here 100 and 100, 200, 300, 100, 200, 300. We have to deduct the cost. Cost is, we say 50, 150, 220. You are arriving at the profit. 100 minus 50 is 50, 200 minus 150 is 50, 300 minus 220 is 80, right? So this is the calculation before applying the taxes, the profits calculation before applying the taxes, right? Before applying the taxes to the sales amount, selling amount. This is the selling amount after applying the taxes. This is 110, this is 220, and this is 330, right? This is the new selling price with the tax. Selling price with the tax, that is called gross selling price. The selling price without tax called net selling price. Net selling price. Now we are deducting the cost. Cost is 50, cost is 150, cost is 220. Right? Again we are deducting sales tax. Right? This is sales tax 10, sales tax 20, sales tax 30. Whatever we are imposing the tax, we are deducting from our sales. Right? So what is our profit? Here 50, 110 minus 50 minus 10 is 150, and 220 minus 150 minus 20 is 50. And here again in C, 330 minus 220 minus 10, it is the 80. 80. 50-50. 50-50. There's no change in profit after, this is after applying the, after sales tax on selling price, on selling price after applying selling price, before applying charging the selling price. So have you understood, right? I hope that you would have understood. Otherwise you can go through again, and if you have, after going through also, if you have any questions you can ask me, right? And in next lesson, in next chapter, in next class, we are going to discuss the exercises for sales tax, right? Then you can understand what is the sales tax. This is the explanation given for the sales tax. Okay, thank you. I hope to meet you in next session.